Senator Warner.
I usually agree with my friend from Louisiana, but I think we may be on top of something that is transformational, and I don't think you can separate the underlying distributed ledger or blockchain from some of these crypto assets. And if we had the same rate of increase that the next 2 years that we've had the last couple of years, we're talking now a couple $100 billion, we'd be at north of $20 trillion caught up in this area by 2020. And I think I remember back, I was lucky enough to get in the cell phone business back in the early 80s, and everybody thought it was going to be a small business, and they were wrong, and I got rich. I think we're looking at the same kind of transformation about to take place, and we are going to have to wrap our arms around it. We've talked about some of the consumer protection issues, but we've got money laundering issues. We've got cybersecurity issues. A third of the Bitcoin exchanges have been cyber hacked between 2009 and 2015. I'm not exactly sure what the right regime ought to be, but I would argue that, well, I commend the Treasury Secretary for putting a working group together, but I would argue this is the reason we created FSOC in the first place, that this rises potentially to the level of a systemically relevant event. And I'd just be curious whether you believe, and I commend what both of you are trying to do, but whether this ought to elevate to an FSOC level analysis.
So, Senator, I had the same question you had, which is there's a big rise here. If it does keep going, is this a systemic issue? Which is one of the reasons we brought it up at FSOC, talked about it at FSOC. I again commend the Treasury Secretary for forming the working group. I want to go back to separating ICOs and cryptocurrencies. ICOs that are securities offerings, we should regulate them like we regulate securities offerings. End of story.
Let me make sure, because I've got a couple more points.
Thank you, Senator. Just real quickly, on the issue of disclosure, sometimes what we're seeing is not a problem of absence of disclosure, it's false disclosure. And false disclosure is often fraud, and I think we need to step in there. But just in terms of discussion, as Chairman Clayton mentioned, we have begun discussions at FSOC. In addition, there's also been discussions led by Chairman Clayton at the Financial Stability Board and also at IOSCO, which is the International Organization of Securities Commissioners. So these discussions are taking place at the right levels of debate, but there's so much more to be done.
But, and again, to my friend from Louisiana point, we've got this, we're focused on a lot on Bitcoin and crypto assets, cryptocurrencies, and I think there's even definitional issues here. But you've got a whole new platform called Ethereum where they're creating, file sharing or extra computer time. I'm not sure what kind of assets those fall into. Are they potentially regulated within your realm, or if there is a trading exchange, a tokenization exchange between excess computer time? I'm not sure where that fits at this point.
The definition of a security, I believe, the people who wrote the 34 Act and the 33 Act, they were smart. They did it on a principled basis, and they basically said, if you're giving people money in exchange for a future development of a business with the hope of a return, and whether that return comes in the form of server time or your ability to sell server time, it's a security.
But there have been, and I concur with the approach you've taken in terms of the ICOs, and I think there's been some very bad behavior. Yet certain ICOs, the SEC has not stopped, others they have stopped. And are you going to go back and re-review the ones that have gone forward?
Let me say another thing about the 33 and 34 Act. When they were written, there was a great recognition that there was a tremendous amount of securities activity in this country, and that we were going to rely on gatekeepers to help us enforce those, and liability to help us enforce those rules. Accountants, lawyers, underwriters, sellers, and the like. I'm counting on those people to do their job, and I've made that clear.
Let me ask Chairman Giancarlo, what we did, and one of the things I'm concerned about was that I think we may have moved too fast on allowing, for example, futures trading on Bitcoin. And I would just wonder, you've allowed future trading contracts on Bitcoin, yet the SEC has not allowed ETFs. I'm just worried that we need a much more coordinated effort, because I think the potential writ large amongst crypto assets and the underlying blockchain could be as transformational as wireless was years ago. And I think we're going to need a much more coordinated effort. I know my time's expired, but if you could both quickly comment on that, I'd appreciate it.
I believe it is critically important that we coordinate on this. I believe that we are all both individually and collectively understanding our authorities, understanding this new technology, working around it. There was a communication amongst myself, Chairman Clayton, the Treasury Secretary, and others in connection with Bitcoin futures. And Bitcoin futures are quite different than the Bitcoin market. The Bitcoin is an anonymous area. Bitcoin futures is fully transparent to the regulator. Bitcoin retail, Bitcoin futures mostly institutional and high net worth. Bitcoin futures regulated. Bitcoin futures regulated, Bitcoin unregulated. And with Bitcoin futures, we're now having visibility into underlying spot markets and data from those markets that we would not otherwise have.
Completely agree on coordination. Like I said, I break it down into 3 areas. There's this great technology that I agree with you has promise. There are these pure cryptocurrencies, which we need to take a look at across FinCEN, Treasury, CFTC, Fed. And then there are securities offerings that are called ICOs that should be undertaken as securities offerings, consistent with our regulatory regime.